So we do see an increase in mortgage applications of those homeowners that have a mortgage 48 months and older. Hi everyone, Louis Zitting, founder of MonitorBase, coming to you with the MonitorBase Insider Report for the week. We do have some interesting changes to report. For the past few months, we've seen a massive amount of mortgage applications of homeowners that have a mortgage age of 1 to 12 months. So they've closed their mortgage within 1 to 12 months. And that's created a lot of EPO risk and problems. And hopefully if you're getting our inquiry alerts, that's helping solve some of those and retain those customers. But we saw just in the last week a reduction in those recent mortgages applying for a refinance. Not a huge change, but it's the first time we've seen that drop a little bit. And that's being replaced by inquiries or applications of mortgages that are older in the 48-month or older period. And we think that's likely people that are deciding now it's a good time to list their home and make a move. There was everybody was really on pause there through the first stages of the pandemic, and I think people are deciding now it's time to make that change. The interest rates are super low, values have been great in most areas, so we do see an increase in mortgage applications of those homeowners that have a mortgage 48 months and older. Refinances are going like crazy. I know everybody's just at capacity, and now there's purchase business coming back on the market. It is increasing the purchase volume for existing home sales. It's still not really helping inventory. We're going to have to see people either leaving the market or builders catching up to solve for the inventory problems. And that, another thing that could help the inventory of existing home sales or, first-time home buyers getting in the market is, we've got this large amount of people that went into forbearance. And in our data, we're actually seeing that the people in forbearance are applying for a mortgage at almost as much of a rate as the general population of homeowners with a mortgage. And so something that kind of tells us is, it's not necessarily that they can refinance. Those with an FHA loan aren't really going to be able to take advantage of a refinance until they have a good mortgage payment history. But we're hearing all kinds of trends of those people that went into forbearance are kind of realizing that that wasn't that great of a deal. It's just adding to the balance of their mortgage. And, for some of those, it may have solved their problems, temporary problems, and they can come out of forbearance and start making their payments. But I think it will start to create a good amount of people that want to come out of forbearance and list their home and sell it before that eats up all the equity that they have. So that could mean that those people are leaving the home ownership market and they're going to go rent for a while until they can get, back to the employment state that they need, or maybe just selling and downsizing. So that might create some inventory, not sure. But we definitely do, that was an interesting stat to see that people in forbearance still have a pretty high rate of applying for a mortgage right now. So besides that, seems like, we're firing on all cylinders. We've got refinance going like crazy, purchase going like crazy, just, good luck on closing all those transactions. Just, I guess, be as efficient as you can be and try and get as much of that done as you can. We always tell our users, keep focus on your purchase business. This is a really good time to gather up a bunch of new referral partner business and home buyer business, because everyone's so busy that people are getting neglected. And I know that sounds easier than it is when your pipelines are full. But yeah, good luck. I hope you the best on just getting all that volume through the pipe. We'll talk to you next week. Feel free to share this with colleagues. Subscribe to our blog if you haven't yet, or join our Facebook MonitorBase Insider group.